next up we have First Tin. It's actually a fairly newly listed company in London on the London Stock Exchange. Different focus again. Yes, we're Deutsche Goldmesse, but we don't just look at gold. So I'm quite excited to learn more about tin. This is the first time I'm hearing the full pitch, so I'm quite excited about that as well. And Thomas, please do it in English. And but you have assets in Australia and Germany, so I'm really excited to learn about that. Thanks for joining us. Yeah. Good to see you.
Thanks. Yeah, thanks, Kai. Ladies and gentlemen, another one different commodity, which I would really like to talk about. So even by far smaller than zinc, what we heard about. Our story is about tin. The tin commodity market is a very small one. We talk about an annual production worldwide about 380,000 tons only, which translate at an actual price of $35,000 per ton of tin into a 30 billion only total commodity market. The benefit compared to every other commodity is you need tin to explain, that's one point, but there is no big miner anymore in. So there is plenty of opportunity for small and mid-size miners. Reason is a very long story. So there has been a collapse in tin market in the 1980s due to different reasons. What are we talking about with First Tin? So we went public. Too fast. Our IPO was at the 8th of April, the actual year. At the London Stock Exchange, we are listed at the Standard Board, and we are as well listed in Frankfurt. So that's a picture from our IPO. What is our portfolio about? We have two very advanced projects, one in Germany and one in Australia. There are a lot of figures given. I will translate that a little bit more in what you are maybe more used to. We have a project in Germany called Tellerhäuser. That's about 250 kilometers south of Berlin in former East Germany. It's a world-class asset in regards to very low capex. We have for that asset a scoping study that tells us $49 million pre-production capex only. We are in a very mining-friendly area, in an area that calls in German Erzgebirge, which literally translates into English as ore mountains. I guess that tells you all and everything, where the people are very used to mining, because in the past there was, until 1990, there was a lot of mining there. And they still remember as well, because it's one of the areas in Germany that is not very well developed, so they still remember that miners are well paid. So that's welcome with the communities because they are looking for taxes, and it's welcome with the people there because they are looking for well-paid jobs. This mine, this is really a USP, will become a zero waste mine because we will turn 45% of the mine volume, 500,000 tons annually, into product, and that shrinks the volume by far enough to leave everything, all the mine waste underground. So we will have no mine waste dump, nor waste rock dump, nor a tailing pond at the surface. And we have an asset in Australia, a project called Taronga, about 4 hours drive south of Brisbane, just at the edge, just at the corner, situated in New South Wales. Another one, very mining-friendly jurisdiction. For Australian, and so it's in a very urban area still, so it's not in the outback. In a 50-kilometer radius, we have still 3 mid-sized towns. There are villages around. There is no native title. That's a big benefit for a mine developer to get fast track without major difficulties, but we can source workforce from the locals, so there it is will not become necessary to pay these horrible salaries that we know from these outback mining regions, outback mining projects. There is still a lot of infrastructure available. Another one benefit for that asset, we own a pre-visibility study that we inherited from the previous owner, from Austin. Austin is an ASX listed company. That pre-visibility study tells us $76 million pre-production capex. If you put that together, 125 million capex to come into production at a tin price of 30,000 and a WACC of 8%, and it turns into a fourfold increase in value. The more recent scene, 40,000, would even increase the value 7 times. To give you maybe an understanding what we are talking about, in Germany, in Tellerhäuser, we talk about a tin content, a head grade of around 1% of tin, okay? What does it mean? That means comparable to a 6.7 grams gold asset or even a 4% copper asset. So something everybody of us would really go to develop it. And in Australia, the head grade is smaller. That will become an open pit mine. We talk about 0.17% of tin, which translates into 1.2 grams of gold, or roughly 0.8% of copper, as well a very nice head grade for a potential copper or gold asset. What is tin? What is the use case for tin? Most of the tin goes is solder. So to say it in a nutshell, joins together all the electrical connections. And if we look on our wish list as mankind, so all this energy revolution, renewable energies, IT equipment, or advanced robotics, electronics, for all of that we need tin. And the forecast says until 2030 we need another 100,000 tons of tin. So looking onto the primary production, that would mean 1/3 more than we have today. And there was a study done by Rio Tinto and MIT. This is the figure that the chart that you see here. And the question was, what is the most impacted metal for all that new future technologies? And what we read in the newspapers, what we are discussing about, is mainly copper and cobalt and lithium and all of that. What is always forgotten is tin, but without tin there is no electrical connection. So good to get the tin back on the stage. What is tin used for? So a lot of that goes into 5G connections to give you a certain grip. And combustion-driven car has about 400 grams of tin in it. An electrical-driven car, 4 times more, 1.5 kilograms. If we assume until 2030 that about 30% of the annual car production will turn into electrical-driven, not 100%, only 30%, that's good for another 55,000 tons of tin consumption. There is no other technology necessary to consume more. Please keep in mind 55,000 tons. What you see here is that the tin is a bit unevenly distributed in the world. So the red dots are where the tin is today coming from. So from countries like China, okay, we heard that already, but as well countries like Myanmar, Indonesia, or Congo. So something that is really difficult to declare that as conflict-free, and most of the mines there as well don't work ESG friendly. And the past 16 years, I worked for a larger German non-ferrous metal producer. For Arubis, I was there a board member, and I enjoyed very much the annual audits, for instance, by Apple and by Tesla, by all of them, that really dig into the details to declare it conflict-free and ESG conform. I have no clue how they do that with a Congo delivered tin for their iPhone, but that's their job. We will deliver that conflict-free. What you see here, the green surrounded area, is rather more a tin district that we own in the Erzgebirge. The blue, so the blue and yellow and red pattern that you see on the right-hand side lower corner, that's the surface projection of our ore body of our project in Tellerhäuser. So it's very well explored already. We don't need any further exploration more there. We have about 140 kilometers of drill holes, so we know the ore body quite good. And we have a second resource there with a chalk compliance statement. So for Tellerhäuser, we have a chalk compliance statement, and for Gottesberg as well. Tellerhäuser is more advanced. The other ones might become projects that will kick in the later 20s, while for Tellerhäuser, I'm looking forward to get that project into production in 2025. The other projects we might develop as a hub and spoke approach, so having one processing plant and then shipping only the pre-concentrated ore into that short distance available processing plant. The other one project I talked about is Taronga, about 4 hours south of Brisbane. As well there, we own rather more a tin district, so all those red bubbles are outcrops of tin mineralization, while only the red bubble in the middle is the Taronga ore body, where we own a JORC-compliant resource statement for. This will become an open pit mine, but we own enough land in order to compensate for the environmental damage that we will generate while doing open pit mine. The other red bubbles, there has been tin mining in the region until 1985, but they mined only the alluvial material on top. Always, once they hit the hard rock, they stopped mining, and this in particular is what we are going to develop. Those are hard rock mines. And the most promising of that red bubbles is called Great Britain. We will drill there a number of holes to see if that is really promising enough to do an extended exploration program to come potentially then later on to a JORC-compliant resource statement. We have a planning, and that tells me, because I have put that in place, to develop both projects, so the German one as well the Australian one in parallel, within the next 2.5 years, through the permitting processes and through the bankable visibility studies. All of that we will do in parallel, and I can do that because I have 2 independent teams. I have one in Germany and one in Australia. Both of them can run their project independent, and I will take care that they have enough exchange between them, because if you run fast, you will do mistakes. And my task is to really take care that the mistake is only done once. So this is why they need to exchange between each other. And there's a 5th work stream that we will do. This is further exploration drilling in the German region, as well a little bit in Australia, what I already explained to you. This is the drilling program. So we quite recently stopped and finished the drilling program at our Gottesberg resource. So we are right now in the process to cut the drill cores and to send them for assays. I expect the first results and the first report then in autumn this year. And we started this week the drilling at our Gottesberg exploration license. And we will do that until we will start drilling in Germany, deep hole drillings at our Tellerhäuser resource, because there the lower part of the ore body still needs a few holes, which goes in parallel and in the right timing for the bankable visibility study. And we will start in the middle of the summer at Taronga, where the ore body is still open to the bottom and to the south. Nevertheless, we have a JORC-compliant resource and even a reserve statement for that. So it's profitable enough, but an extension is good for me, for the value of the company, and for the share price as well. And we will put a few drill holes into Great Britain to see if it's not only from the surface good to look like, but maybe as well a further drill target. I told you already a lot about ESG and conflict-free. It's good to talk about it, but it's even better to get it measured independently. So I prepared with my team all the spreadsheets and handed it in for a third-party independent audit to DIGB, which is a quite known auditing facility for small and medium miners. And I expect the return and the answer within the next few weeks. Yeah. Thank you very much. I hope you have a few questions. We are well financed, so with the IPO we raised 20 million pounds, with some still cash left in the bank before that. We will finance with that the bankable visibilities, the permitting procedures, and we have as well reserved 6 million for further drilling programs, assuming Great Britain will turn out as very promising. So a drill program to get it into a resource statement is not foreseen, so that would be then a reason for another capital raise. But it will bring me, the 20 million will bring me through the next 18 to 20 months, if there is not something else, into an investment ready status.
Thomas, thank you so much.
My pleasure.
Great presentation. Thank you.